Have you ever wondered what would happen if the Social Security Administration looked at your record today and found missing information? Most people assume the government already has everything it needs. They assume their earnings were recorded correctly. They assume their retirement benefit has already been calculated accurately. And they assume that when the time comes to claim Social Security, the checks will simply arrive with the correct amount. But here's the problem. Every year, thousands of Americans discover that information is missing from their Social Security records. Some find out after they retire. Some find out after they file for benefits, and some don't discover the problem until it's already costing them money every single month. The worst part, many of these mistakes could have been fixed years earlier if the person had one simple document. Today, we're talking about the document the Social Security Administration itself recommends you review regularly. A document that can reveal missing earnings, incorrect records, and mistakes that may reduce your future benefits. And if you don't have it, you may never know there's a problem until it's too late. Stay with me because before this video ends, you'll know exactly what document you need, how to get it, what to look for, and why millions of Americans should check it immediately. Before we begin, if you rely on Social Security, Medicare, SSI, or retirement benefits, subscribe to the channel and turn on notifications. The rules change constantly. Income limits change, benefit calculations change, Medicare premiums change, and unfortunately the government doesn't always send clear explanations when those changes happen. This channel exists to break everything down into plain English so you can protect your money and avoid costly mistakes. Now let's get into it. The document we're talking about today is called your Social Security Statement. If you've never seen it before, you're not alone. Millions of Americans haven't looked at theirs in years. Some don't even know it exists. But according to the Social Security Administration, this statement contains one of the most important financial records you'll ever review. Why? Because your future retirement benefit is based almost entirely on the earnings history shown inside that document. Every paycheck you've earned, every year you've worked, every dollar reported under your Social Security number, all of it helps determine how much you'll receive in retirement. And if even part of that information is wrong, your benefit could be wrong too. Now, let's pause for a second. Imagine working for 30 or 40 years. Imagine paying Social Security taxes out of every paycheck. Then imagine discovering that one or more years of earnings never made it into your record. Those missing earnings could reduce the amount you're entitled to receive every month. Not for 1 year, not for 5 years, for the rest of your life. That's exactly why checking this document matters. And here's something that surprises many people. The SSA does not automatically verify every number with you. The system relies heavily on payroll reports submitted by employers over decades. Most of the time everything works correctly, but sometimes it doesn't. Employers make mistakes, records get lost, names get misspelled. Social Security numbers get entered incorrectly, and when that happens, earnings may not appear where they're supposed to. The Social Security Statement helps you spot those problems before they become permanent. So what's actually inside this document? The first section shows your estimated retirement benefits. This is the amount Social Security currently estimates you could receive at different claiming ages. You'll usually see estimates for age 62, full retirement age, and age 70. Many people focus only on these numbers, but that's not actually the most important section. The most important part is your earnings record. This section lists your taxable earnings year by year. For some people, it goes back decades. This is where you need to pay attention. Look at every year carefully. Ask yourself, did I work that year? Does the income shown look accurate? Is anything missing? Do any years show zero earnings when you know you were employed? Because those are the red flags, and those red flags can become expensive. Let's look at an example. Suppose someone worked throughout the 1990s. They earned steady wages every year. But one employer submitted incorrect payroll information. As a result, an entire year of earnings never got properly credited. The worker doesn't know, the SSA doesn't notify them. Life goes on. 20 years later they file for retirement. The benefit calculation uses the lower earnings record. The monthly benefit is smaller, not because they didn't earn the money, not because they weren't entitled to it, simply because the earnings record was incomplete. And now proving what happened decades later becomes much harder. That's why acting early matters. The longer you wait, the more difficult it becomes to find supporting documents. Old tax returns disappear, employers close, payroll records get destroyed, people move, files get lost. what can be corrected today might become impossible to prove 20 years from now. That's why experts consistently recommend checking your Social Security statement long before retirement. Now here's another issue many people overlook: self-employment income. If you've ever worked as an independent contractor, freelancer, consultant, or business owner, you need to pay especially close attention. Why? Because Social Security benefits depend on earnings that were properly reported and taxed. If self-employment income wasn't reported correctly, those earnings may not be helping your future benefit calculation. Many Americans spent years running side businesses, driving deliveries, doing freelance work, operating small companies. And some assume all that income automatically counts towards Social Security, but that's not always the case. Again, the statement tells the story. If the earnings aren't showing up, that's a sign something needs to be investigated. Now let's talk about another group that should be paying attention: people who have recently changed their names. Marriage, divorce, legal name changes. These events can sometimes create record mismatches if information isn't updated correctly. The result? Earnings records that don't match properly, benefits delayed, additional verification requests, and unnecessary complications when filing. Checking your statement helps catch these issues early. Now here's something many viewers don't realize. Your Social Security statement doesn't just estimate retirement benefits, it also includes disability benefit estimates and survivor benefit estimates. That means the document affects more than just retirement. If something happened tomorrow and you became disabled, Social Security would rely on your earnings history. If your family needed survivor benefits, earnings history matters there too. So this isn't simply about retirement checks decades from now. It's about protection today. Now let's discuss how to get the document. The easiest method is through your My Social Security account. The Social Security Administration allows individuals to access statements online. Once your account is set up, you can review your earnings history, benefit estimates, and other important information. The process typically takes only a few minutes. And once you're inside, you'll have access to information that could impact thousands of dollars in future benefits. If you've never created an account, today is a good day to do it. Not next month, not next year, today. Because every year you delay is another year a potential error remains unnoticed. And remember, correcting mistakes is always easier when the records are fresh. Now let's talk about what to do if you actually find a problem. First, don't panic. Not every discrepancy means disaster. Many issues can be corrected, but you'll need documentation. That's where tax returns, W-2 forms, pay stubs, and other employment records become important. The SSA may request evidence showing what you earned during the year in question. The stronger your documentation, the easier the correction process becomes. That's another reason not to wait. Finding a W-2 from last year is easy. Finding one from 30 years ago is another story entirely. Now here's a question many people ask: how often should I review my Social Security statement? The answer is simple: at least once every year. Think of it the same way you think about checking your bank account. You wouldn't ignore your bank records for 10 years. You wouldn't assume every transaction was automatically correct forever. Yet many people do exactly that with Social Security. They trust that everything is accurate without ever looking. That's a risky approach. A few minutes of review could potentially protect thousands of dollars in future benefits. And here's another reason annual reviews matter. Your benefit estimates change over time. As your earnings increase, the projections can change. As new years are added to your record, calculations adjust. Reviewing annually helps you understand where you stand and what your retirement picture looks like. Now let's address one of the biggest misconceptions. Many people believe that once they reach retirement age, it's too late to make corrections. That isn't always true. Some corrections can still be made. However, waiting until retirement creates challenges. By then, decades may have passed, documents may no longer exist, employers may be impossible to contact, witnesses may be unavailable. In other words, the sooner errors are identified, the better your chances of fixing them successfully. This is why financial advisors often recommend treating your Social Security statement as one of the most important documents you own. Because unlike many financial records, this one directly affects income you may rely on for the rest of your life. Think about that. Your retirement benefit isn't just another payment. For millions of Americans, it's the foundation of their retirement income. It helps pay housing costs, food costs, medical expenses, utility bills, insurance premiums, and countless other necessities. Even a small error can add up dramatically over 20 or 30 years of retirement. That's why ignoring this document simply isn't worth the risk. Let's quickly summarize. The Social Security Statement is one of the most important financial documents available to American workers. It shows your earnings history. It estimates retirement benefits. It estimates disability benefits. It estimates survivor benefits. Most importantly, it allows you to verify that your earnings were recorded correctly. Missing earnings can reduce benefits. Incorrect records can cause delays, and waiting too long can make corrections much harder. If you haven't reviewed your statement recently, now is the time. Create a My Social Security account. Review your earnings year by year, compare them to your records, and if something looks wrong, begin gathering documentation immediately, because the sooner problems are identified, the easier they are to solve. And remember this: the Social Security Administration can only calculate benefits based on the information it has. If the information is wrong, the calculation may be wrong. That's why this document matters so much. It isn't paperwork, it isn't bureaucracy, it's your financial future. And it may be the difference between receiving every dollar you've earned and leaving money behind without ever knowing it. If you found this information helpful, subscribe to the channel, turn on notifications, and share this video with a friend or family member who receives Social Security or plans to claim benefits in the future. One quick review today could prevent years of lost income tomorrow.